Thank you. So I'm going to start. I'm going to start now uh, from the paper which I left yesterday. Like till I recall, we did the question number 1 only, and let me start the second question of that series. Before I start the second question of that series, still I welcome all of you for your queries, if anything, any kind of thing which you guys looking for support. We can support you in any respect. Please do let me know. I'm going to start practice exam 3. We did this question yesterday, right? Should I start the second question of this? Should I start the second question of this? Like I said yesterday, I would be only focusing towards the section A type question. So I would not be looking for the section B type of question. Further, once we are done with this question, I will move on to any other practice exam question. Okay. You should assume today's date is 8 March 2022. Today's date is 8 March 2022. Your manager has sent you a schedule prepared by Claire Faulkner concerning her company Plaid Limited and a new company Quill Limited, which she intends to incorporate on 1st April 2022. The covering email from your manager details the work he requires you to do. Two documents are set out in the exhibits. One attachment schedule from Claire Faulkner dated 7th March 2002. Second, an extract from an email from your manager dated 8 March 22. This information should be used to answer the requirements within your chosen response questions. Let's start reading the schedule. Attachment schedule from Claire dated 7th March 22. Plaid Limited. I have owned the whole of the ordinary share capital of Plaid Limited since 2007. Okay. Plaid Limited trades mainly in the UK and is a UK resident company. It is a UK resident company. It purchases components from third parties to be assembled into finished products. It also has a permanent establishment in the country of Czechia. The profits realized in Czechia are subject to 14% Czech business tax. There is no double tax treaty between the UK and the country of Czechia. Fine. Whenever it is mentioned, there is no tax treaty. It means by default, we will be getting the double tax relief. The budgeted taxable profits of Plaid Limited for the year ending 31st March 23 are set out below. Plaid Limited profitability is very stable. So please assume that the figures for the following year will be the same. Trading profit in UK, fine. Trading profit in the country of Czechia, before deduction of 14% check and tax. So it would be like gross amount because it is before deduction. Taxable total profits amount 55,000. Quill Limited. Quill Limited will be incorporated, registered for VAT, and commence trading on 1st April 2022. It will trade in UK and will be a UK resident company. From a commercial standpoint, my intention was to own Quill Limited personally. However, if there is a sufficient tax advantage, I will consider establishing the company as a wholly owned subsidiary of Plaid Limited. So probably a decision-making point whether Claire Faulkner should own the company or whether the subsidiary or whether the company should own the other company. So that is basically the decision at the moment, which seems like. The first 2 years of budgeted results of Quill Limited are set out below. The trading profit loss figures are before the deduction of capital allowances, but have otherwise been adjusted for the purpose of corporation tax. So it means apart from capital allowances, all have been adjusted. The chargeable gain will not qualify for rollover relief. Fine. Year ending 31st March 23, trading loss 10,500. Year ending 31st March 24, trading profit 11,143,000. Chargeable gain 16,000, and these profits are before deduction of capital allowances. On 1st April 22, Quill Limited will purchase the following assets: new machinery and equipment, 160,000 excluding VAT. Building used for manufacturing and storage, 1.4 million excluding VAT. The cost of building includes 60,000 for land, 300,000 for construction, and 1,040,000 in respect of new thermal insulation and air conditioning in order to create the appropriate conditions for manufacturing. Once completed, the building will be brought into use on 1st October 22. I would like two companies to register as a group for VAT purpose to avoid the need to charge VAT on intra-group sales and to generally reduce administration. And for the group to continue to use the annual accounting scheme currently used by Plaid Limited. I appreciate this would mean that two companies would be jointly and severely liable for the VAT liability. Plaid Limited, unreported chargeable gain. I have just discovered that a chargeable gain of 21,600 realized by Plaid Limited in the year ended 31st March 18 was omitted from its corporation tax return. However, because the gain arose in respect of sale of land, it was reported for the purpose of stamp duty land tax. Accordingly, I assume we do not need to do anything, and HMRC will contact us about this in some point of time. Like I was referring, this seems to be the ethical point kind of discussion. Email from your manager. Please carry out the following work. What the following work they are expecting to carry out? In order to help clear, make a decision on the ownership of Quill Limited. Advisor of the tax advantage of Quill Limited being a wholly owned subsidiary of Plaid Limited, such that the two companies form a group relief group. You should carry out this work in 3 stages. Explain with supporting calculations the maximum amount of group relief which Plaid Limited would need to receive for the year ending 31st March 23, such that none of its double tax relief in respect of the check-in tax would be wasted, and its corporation tax payable would be nil. You should assume that the rate of corporation tax is 19% for all accounting periods. Prepare calculations of the tax liabilities of two companies for the year ending 31st March 24. Your calculation should be on the basis of the trading loss of Quill Limited will be used as soon as possible, whilst restricting the trading loss, restricting the amount of group relief in accounting period to the maximum figure you calculated in part 1. Conclude by explaining the tax advantage of Quill Limited becoming a wholly owned subsidiary of Plaid Limited as opposed to being personally by Clear. When carrying out this work, you should be aware of the following. In the year ended 31st March 23, the whole of annual investment allowance will be available to Quill Limited, and Quill Limited will claim the maximum capital allowances available. Neither of the two companies will be required to pay corporation tax in quarterly installment. This will be true regardless of who owns Quill Limited. Explain any additional matters of which Clear should be aware in relation to group registration for the purpose of VAT. Plaid Limited, unreported chargeable gain. Explain the implications for Plaid Limited and for our firm of the failure to report the chargeable gain to HMRC. You should not address money laundering or the possible of penalties, as I have already spoken to Clear about these matters. Tax manager. Fine. Let's look into the marks allocation. Prepare the notes requested in the email from your manager. Following marks are available. Group relief, group registration for VAT, Plaid Limited unreported chargeable gains. (18), 2 and 5. Okay, I'm going to start my solution. I'm going to start my solution of Plaid Limited. At the moment, I'm talking about this would be like my main heading, which I was referring yesterday. After the group relief, explain with supporting calculations the maximum amount of group relief which Plaid Limited would need to receive for the year ending 31st March 23. Okay. Suggest a suitable name for this. Maximum group relief. Explain with supporting calculations the maximum group relief which Plaid Limited would need to receive from such that none of its double tax relief in respect of check and tax would be wasted and its corporation tax payable would become nil. You should assume that the rate of corporation tax is 19% for all accounting periods. By the way, if I can see, there is a VAT type of stuff. Sorry, there is capital allowance stuff as well. So if I deduct the if I adjust the capital allowance, my trading income would go further down, as in my loss would go up. And if my loss would go up, I would be in a better position. I would be in a better position to adjust complete of my trading loss. So maximum group relief. How much maximum group relief would I claim? The complete amount of Plaid Limited trading income can be adjusted from the group loss relief from Quill Limited, right? However, since the hold on. However, since the check-in tax rate is lower than UK tax rate, Since the check-in tax rate is lower than the UK tax rate, hence the complete $7,000 of loss adjustment from trading profit arising in country of Czechia would effectively waste the By the way, if I take your view, how many of you understand what is the point they are trying to achieve in requirement number one? Be honest. How many of you understand what is the exact requirement in situation number one? Can I have feedback from all of you, please, in this regard? I noted this, Asad. I'm not talking about the second point which I mentioned. I'm talking about the requirement. To be exact, that's fine, Moses. Can I have more feedback around this? Mustafa, Faisal, Hussein, Nishane Zahra, Easter. Maximum loss can be recovered. Okay. That's it. Let me first help you in understanding the requirement. Then I will share the exact ask or exactly so that you can articulate it accordingly. Articulation is the secondary thing. At the moment, the first important thing is you should be in a position to understand. You should be in a position to understand that what is the exact ask in the question. Okay. You should. Okay. So let me guide you in the simple words rather than I start solving the question. Imagine what's the total UK check-in trading income. UK trading income is 48. Check-in trading income is 7. As a result, total trading income is 55, right? Now, for example, uh, I have unlimited loss to adjust from here. Like I can adjust unlimited amount of loss, but the requirement is you can use the loss, but loss should not be wasted. You can use the loss, but loss should not be wasted. Okay. For example, on a trial and error basis, and that's very clearly first of all, trial and error, then I will guide you exactly how to take this up. For example, if I adjust 50,000 amount of loss, 48,000 from here, 2,000 from here, I will change these figures, okay? As a result, my taxable income amount, my taxable total profits amount, 5,000. On this 5,000, corporation tax at the rate 18, at the rate 19% would be applied. So 19% of 5,000 is like 950, I guess. I would get DTR, and then it would be my corporation tax. DTR would be lower of UK tax or foreign tax. What is the amount of foreign tax? The amount of foreign tax is 7,000 into 14%, which translates into yes, please, 14% of 7,000 amount, 980. Thank you. This is nil at the moment. This is like 5,000, 7 minus 5. So 5,000 multiplied by 19%. This translates into 950, right? Now be with me. Be with me. Imagine in the same question, if I would have deducted 49,000 of loss, imagine if I have deducted 49,000 of loss. So 55 minus 49 is like 6,000. 6,000 into 19% is 1040, 1140, 1140, right? Now 48 to be deducted from here, 1,000 to be deducted from here. If 1,000 to be deducted from here, this translates into 6,000. This translates into nil. Foreign tax remains same because foreign tax remains same because foreign tax is on the gross amount of income. UK tax under the green solution, it would be 6,000 into 19%, which works out to be 1140. Agreed? Now, if you guys look carefully, if you guys look very carefully, under the blue approach, under the blue solution, DTR is lower of UK tax or foreign tax, right? $950 versus $980. What amount of DTR you will get? You will get DTR of $950. But if you guys look under the green solution, 1140 versus 980, how much DTR you will get? It means under the red solution, your corporation tax payable is nil. I agree. But technically speaking, you are wasting your DTR, because if you guys look into this very carefully, understand this point very carefully, the maximum amount of DTR can be 980. Why it can, like, your DTR can be 980, can be less than 980, but it cannot be more than 980, right? Because if you are not going to deduct any amount from here, if you are not going to deduct any amount from here, this would remain 7,000. If it would remain 7,000, the 19% of 7,000 would be higher. So it means the maximum amount which you can, sorry, the maximum DTR would be by the amount 980. Agreed? If you are deducting, sorry, if your DTR is less than 980, it means you are effectively wasting your DTR. It means you are effectively wasting your DTR. So, like if I look into the blue solution, blue and red solution, I'm getting DTR by 950. It means I'm wasting the DTR. But if I look into the green and black solution, there is some corporation tax payable. So it means I can claim some more DTR. It means I can claim some more DTR. Or alternatively, you can say I can adjust some more amount of loss. Now, how much more amount of loss can you adjust? Twister, the answer is yes. Because if the foreign rate of tax is higher than the UK, then UK tax rate would be your DTR amount. In such situation, if you adjust even a single pound of loss, it means you are wasting your DTR. Now, how much DTR can I adjust? Let me do it bit different color. If it remains 980, if anyhow it remains 980, there will be no waste of DTR. This 19% is constant. So if I ask you 980 divided by 19%, that works out to be 980 divided by 19%, this works out to be 5158. It means this amount should be 5158. If this amount is 5158, your UK tax would amount 980. And if your UK tax amount 980, it means there will be no waste of DTR. To arrive this figure at 980, how much loss you should adjust? You should be adjusting by 7,000 minus 5158. 7,000 minus 5158. 1842. It means you should adjust 1842 from here. 1842 plus 48,000. It means the total loss adjustment should be by the amount 49842. If you adjust 49482, your taxable income amount 5158. If you apply tax rate on 5158, that would amount 980. DTR 980. As a result, corporation tax payable becomes nil. Are you guys conceptually clear with this point? Are you guys conceptually clear with this point? Thank you for the feedback. Thank you, Faisal. So this is exactly the data of the question. This is exactly the ask in the requirement number one. I just need now to articulate it, nothing else. Any further feedback, please? No further feedback? Okay. So because because foreign tax has nothing to do with the UK tax, na. So whether you adjust the laws or do not adjust the laws, that will impact the UK tax. The foreign tax is levied by the foreign tax authorities based on the income. So the gross income is 7,000. So the foreign tax is applied on 7,000. Welcome. Uh, Last call. Any further feedback? Anything further which you want to clarify? Just to share with you. In the ATX, this concept is examined after a quite long time. So earlier, this concept, and when I'm using the word earlier, Mustafa, yes. To be exact, yes. Because this is the only way where my DTR would not be wasting. Else in every other situation, either I would be ending up in paying some corporation tax. Like if you look into the uh, green and black solution, I am and I am like ending up in paying some amount of tax, right? Or under the blue and red solution, I would be ending up in I would be ending up in wasting the DTR. So neither I want to waste the DTR, nor I want to end up in paying any of the corporation tax liability. Any again, since there was a question, so I am taking again giving a last call. Fine, Mustafa, please go ahead. If you guys are clear with this, let me translate this whole explanation into my answer. This is, if you guys read the requirement one again with me, explain with supporting calculation the maximum amount of group relief which Plaid Limited would need to receive for the year ending 31st March 23, such that none of its double tax relief in respect of check-in tax would be wasted, none of its DTR would be wasted, and its UK corporation tax payable would become nil. Is the now but post reading the requirement and looking for the solution, everyone is clear with the ask of the question, or is there any further thing left? Now I need to translate this whole discussion into the discussion. Let's continue. However, hence the complete would effectively waste the DTR. So I understand that you guys have the concept to solve this, but we need to translate this whole point into the explanation. Okay. The check-in profits, which would remain subject to UK tax without wasting the DTR, will be 7,000 multiplied by 14%. That was 980, right? And 980 divided by 19%. So 980 divided by 19% was 5158. Accordingly, the loss of 7,000 minus 5158, which was 1842. Accordingly, the loss of 1842 should be deducted from the check-in trading profits. The loss of 1842 should be deducted from the check-in trading profits. If the loss of would be deducted from if the loss of 49842 would be deducted from the total trading income, it would result in taxable profits of 5158 and corporation tax liability of 5158 multiplied by the whole of 980 would be covered by the DTR and corporation tax would be via this. There would be no waste of DTR, neither any I'm done. If there is any feedback, please do let me know. Anything which is not clear. Thank you, Asad. Any feedback, please? To Faisal, uh, uh, under our storyline, under our solution, we are completely deducting the 48,000 of loss from the UK profits, from the UK trading profits. So 48 is there, irrespective of how much you deduct from the check-in profits. 48,000 is there. The discussion is only around how much, and the discussion is mainly around how much to deduct from the check-in profits of 7,000, because DTR only belongs to that 7,000. Whether you want more DTR or less DTR, to increase or decrease the DTR, that's the only play area. Any further feedback, or should I move to the next part? Okay. The second is prepare calculations of the corporation tax liabilities of the two companies for the year ending 31st March 24. Your calculation should be on the basis that the trading loss will be used as soon as possible, while restricting the amount of group relief in accounting period to the maximum figure you calculated in part 1 above. Okay. Corporation tax calculations. I need to look for the formatting stuff. Applied limited. The corporation tax liability for the year ended 31st March 2003 would be nil, as explained above in part 1. The corporation tax liability for the After this, Plant Limited. Corporate 31st March would be as it was loss making. Okay. Corporation tax calculations. Now, if I were to calculate the start, if I were to start the calculation of Plant Limited, taxable total profits as per question were it was very clearly mentioned. Read this line. Plant Limited profitability is very stable. So please assume that the figures for the following year will be the same. Taxable total profits, then I would be deducting some group relief from this. Then I would be arriving at taxable then on this I need to check the amount of, DTR which can be adjusted. I'll be looking for this and updating this. Okay. I will update this 19 minus 0 figure. This minus 0 reflects at the moment I assume like nothing will be adjusted from the check and trading income. So if this holds true, this remains same. Else, I will be deducting something from here. I need to input, two instances. One, what will be the amount of total DTR, the total DTR. Secondly, I need to look, is there any DTR which needs to be deducted from the, check-in based UK trading income. Okay. Then first of all, it was 10,500. Double 143,000. On this, I would get capital allowances. I would get SBA. Then capital allowances, working 1, SBA working 2. Capital allowances. With respect to capital allowances, brought down would be 0 as the business is newly started. Then machinery. Machinery purchased for amount of then after the super deduction, Then the next is building used for manufacturing and storage, 1.4 million. The cost of building includes 60,000 for land. Fine. So out of 1.4 million, 60,000 is for land. Noted. And 300,000 for construction. Okay. And 1.4 million in respect of thermal insulation. So 1.4 million is in respect of thermal insulation and cooling equipment in order to create the appropriate conditions for. If I look into the breakup of 1.4 million, out of 1.4 million, 60,000 is for land, 300,000 is for construction, and 1,040,000 is in respect of new thermal insulation. Needless to say, thermal insulation qualifies for capital allowances or SBA. Thermal insulation qualifies for SBA or capital allowances. My dear, the answer is no. Thermal insulation is part of plant and machinery, and anything which is part of plant and machinery would get capital allowance, not the SBA. Be clear on this piece, please. So thermal insulation, by the way, on thermal insulation, on special rate pool items, we get uh super deduction of 50%, right? So on thermal insulation, first I am allocating AIA up to the limit of 1 million, and the amount which is not covered under 1 million, on that I would be allocating super deduction at the rate and the leftover amount is in the special rate pool by the amount 20,000. By the way, needless to say, the year in which super deduction of first year allowances are given, not AIA, first year allowances are given, in such period there is no WDA. So this would be the carried down, and the total of allowances would be the carried down for one period becomes the brought down for next period. No other acquisition disposal. So on this brought down directly WDA at the rate 6%. If I were to ascertain the amount of capital allowance for year one, I'll be calculating the SBA figure shortly. SBA. SBA is in cost of construction. The cost of construction is SBA not available on land and items covered under plant and machinery, right? So for the year ended 31st March 2023, SBA would be 300,000 multiplied by 3% multiplied by it would be bought into use on 1st October. So in the year one, it would be for 6 upon 12. And for the year ended 31st March 2024, it would be available for whole year. I'm taking a pause and looking for your feedback, if any. Because thermal insulation is to ether. Sorry, I missed to respond your question. Thermal insulation is part of plant and is part of a special rate pool, and anything which is part of a special rate pool would attract super deduction at the rate 50%. And I can share this thing. Help text tables. Have a look. Enhanced capital allowances for companies. Main pool super deduction, special rate pool super deduction. You can name it first year allowance, I don't mind, but these are combinedly called as enhanced capital allowances. Any further thing? Any of you want to copy this question till now? Now, for our own consumption, not part of the requirement, but memorandum of laws. What is the amount of trading loss? 1,243,000. Then adjusted in group in the year ended 49842. Right? Then how much loss can we adjust from Coil Limited? The income of Coil Limited is 1148,000. So I can adjust the loss equal to 1148,000. So if I adjust the loss of 1148,000, as a result, corporation tax of next year would also be nil. By the way, just my check. How much loss is left? The leftover loss is 44,358. 44,358. So it is is this amount greater than 45? What is 45? Why I am sorry, not 45, 48. Is this figure greater than 48? Sir, why are you asking about 48? Why not any other figure? The reason being I'm asking for 48. The reason being I'm asking for 48 is like the amount of loss which will be adjusted in the group is 44,358, which is less than 48. So there will be no impact on the trading profit in the country of Czechia. If it is, then I would be adjusting some amount from here also. I am taking a pause for your feedback, for your questions, if any. Anything which is not clear to any of you, please feel free to reach out. So guys, waiting for your feedback, waiting for your questions, if any. The last part on the UK 48,000 profit is like we did the exercise in part one. To Easter, can you please specify, because uh, okay, I can try to large this, but probably still it would not help as such. What area you are looking for, do let me know so that I can show the exact area. Uh, to Mustafa, I was like in part one, we did one exercise where we were like, we should be, we can deduct the complete 48,000, which belongs to the UK trading profit. But for check-in profit, we need to be vigilant that DTR should not be wasted, right? Same thing we should be doing in next year also. That's my point. And this is the thing which I was taking care of continuously, that I would not be ending up wasting some amount or any amount of DTR in year two. Any further feedback? Can I move ahead? Okay. It would be great if you ask the specific question, else I don't mind explaining the working. Brought down is there on machinery. On machinery, since it's part of main pool, so we get super deduction at the rate 130%, right? So 130% of 160,000. Then thermal insulation. Thermal insulation is part of special rate pool. And on a special rate pool items, the enhanced capital allowance percentage is 6%. Is 50%. So from a planning perspective, it is advisable that first you deduct the AIA from the special rate pool item, then allocate the enhanced capital allowance, which is at the rate 50%. So this is what I followed over here. On thermal insulation, first I allocated the AIA, then I allocated the super deduction. And where super deduction, enhanced capital allowances are given, no WDA is allocated on in that year. Welcome, Easter. To Easter, there are 4-5 items which are always part of a special rate pool. Long life assets, thermal insulations, integral features of the building, and certain motor vehicles. I hope you understand which motor vehicles I'm talking about. So for special rate pool items, there is a defined list, nothing to be mentioned category. For short life, yes, it's mandatory to mention. For a special rate pool, no, it's not. Welcome. Considering that time, rather than solving, I would be explaining and now and making bullets of the question, okay? Right. Conclude by explaining the tax advantage of Coil Limited becoming a wholly owned subsidiary of Plaid Limited as opposed to being owned personally by Clear. So the scenario which revolves around this question, we have to conclude it. So let's make a conclusion. Conclusion. If Q Limited is owned by Plaid Limited, what are the advantages? The advantages are, first of all, uh, uh, we can claim the group relief. We can claim the group relief of amount. In year one, we calculated the group relief of 5948. Over a 2-year period, we claimed a group relief of 94,200. So first of all, the first advantage is uh, if it is owned by Plaid Limited, we can claim a group relief due to which 94,200 of loss will be adjusted in a 2-year period. If not, okay, this will lead to tax savings of 17,898 over a 2-year period, tax savings, cash flow savings of 17,898 over a 2-year period. Lastly, so at the moment, what discussions I have made, let me list it down as part of bullets. Total loss adjusted and 2-year horizon of 94,200. Else loss of 94,200 will be carried forward. Conclusion piece clear? Group registration for VAT. With respect to group registration of VAT, explain any additional matters which should be aware in relation to group registration for VAT. So what will be additional consideration which he should be aware for the group registration of VAT? I do recall there was a pretty long list which was like it should not be considered, it should not be considered, it should not be considered. So what was that list? Um, I don't know. I am unable to zoom it out. Regarding VAT, I would like the two companies to register as a group for VAT purpose to avoid the need to charge VAT on intra-group supplies and to reduce administration. And for the group to continue to use the annual accounting scheme currently used by Plaid Limited. I appreciate that this would mean the two companies would be joint and severely liable for the group VAT liabilities. Explain additional matters which should be aware in relation to group registration for VAT. Minimum 2 points. Asad, summary notes as in, do drop me a message after the class. I would share with you. No issue. Group registration, 2 lines to talk about. Condition about group registration, like 2 or more companies can register as a group for purpose of VAT provided they are established in the UK, they are incorporated in the UK, or one controls the other, or both are under common control. So uh, accordingly, P and Q Limited will be able to register as a group regard sorry, regardless whether P Limited owns Q Limited or both are personally owned by both are personally owned by Clear. Right? Second thing to consider. At the moment, the Pledge Limited is using the annual accounting scheme, right? Probably after the group registration, uh, the turnover, the sales of both the companies would be more than 1.35 million. So they would not be in a position to join the VAT group. To join the uh, to continue with the annual accounting scheme. So condition about group registration. How they meet the condition. Consequence for keep remember one thing, dear students, as in like since Claire already knows that there is no VAT on intra-group sales, so there is no point to reiterate this, right? You need to make a point which is not very much common, not usual with respect to this. So if I look into this, the point which is not common, not usual is this one, the consequence for annual accounting scheme. Two marks, it's fine to write 3 points. Unreported chargeable gain. It is something which talks about the ethical related type of issue. And if I look, read the requirement carefully. Explain the implications for Pledge Limited and for our firm of the failure to report the chargeable gains. You should not address money laundering or the possibilities of penalties, as I have already spoken to Claire about these matters. So you need to discuss the at least 2 to 3 points over here, 2 to 3 points over here. Yes, what will be the implications to P Limited? Yes, any one of you. Implications for P Limited. Implications for P Limited. Let me start discussing. So first of all, who is responsible to report this? Like, are we the consultants are responsible to report that, or is it the responsibility of the company to report it? Be very clear. Primarily, it is the company responsibility to report it, not my responsibility to. My means not the firm responsibility to report it. Okay. So this is the first very important takeaway. Then the second thing is, uh, it would be considered as a tax evasion, which is a criminal offense if they do not report the gain to the tax authorities. And they, they can be charged in trust. They can be charged in trust on any amount. Charge in trust uh, on the outstanding amount. Implications for the firm. First of all, from a firm perspective, we should investigate how this error occurred and whether or not there are any further misdeclarations or misreporting type of stuff or not. Secondly, if client doesn't disclose it, if Pledge Limited doesn't disclose it to tax authorities, probably we need to consider uh, seizing for the client, because in such situation, uh, there is a legal consequence of for the firm as well not to disclose it. although we are not supposed to inform HMRC, why are we going to cease to act advisors for the pledge limited? We are not required to disclose it, but we should inform HMRC in writing that we are no more working as tax advisor for pledge limited, and to the firm and to the pledge limited also, in case they don't disclose it. Yeah, so till seek legal advice, it's fine. But as the question specifically asks, do not discuss about money laundering or penalties in detail. I'm done with the discussion of this question. So if there is any further feedback, please do let me know. I hope a good learning from your side, because how to deal such type of questions is important, is technical, is tricky area. Considering the time, the remaining time, I do not suggest we start a new question. Rather, I like to discuss any kind of queries, uh, any kind of thing which you want to discuss. And if there is no question, no point to discuss, we can close out this session. You are most welcome, Easter. So correct me if I'm wrong. You are basically asking how to tackle out these type of questions, right? The only way to tackle not only this type, every type of question. Hussein, let me talk about this. As opposed to, no. So I was about to respond to your point, Easter. Just give me a minute. Let me read your last part. The answer is no. Within the question, I do not advise to change the sequence. As in, like, it's up to you whether you attempt question 1 in the first instance, or question 2, or question 3, or question 4. But if you are attempting, for example, question 1, attempt it in a sequence. First of all, uh, part A, then part B, then part C, then part D. Within the question, never ever advised to change the sequence. Never ever advised to change the sequence. Like, it is not advisable. Like, I'm good in ethics. Let's solve ethics parts first. Then I'm good in VAT. I will be doing part B in the second. And I, I'm not very good in the corporation tax calculation, so I'll be doing part A at the end. No. Shared sequence to attempt question in exam. If you take my view on this, I suggest to attempt either, like, at least try to attempt section A first, because section A carries 60 marks. And if you are able to attempt 60 marks in a solid way, you will be in a margin of safety. So that's why I always suggest to attempt section A in the first instance. Nevertheless, that's not mandatory. If you feel like, uh, for example, I'm not very much confident in section A as compared, I'm more confident in, for example, section B question, you can start with section B. That's also fine. That's also fine. No, my dear, is that the section A marks are only, the professional marks are only in section A. And mostly, not always, mostly it is in question 1. Mostly, not always. You are most welcome, Hussein. Honestly, all of our efforts are recovered once we look towards your positive results. And then that's the honest point. Work hard. Still, you have, you're most welcome, Easter. So again, all of our time, all of our efforts are like recovered once we hear the positive results of you guys, all of you, not only those who are my students, but for all, for all. I tried my best to to attempt the questions as much as we can, but considering the time limitations, the discussion in the queries also, I was not I was not able to attempt even more than one question a day. I feel sorry for that. Like I only attempted 2 questions with you guys. But rather than probably attempting 2 questions in a quick manner, it's better that we discuss 2 questions in very much detail, along with a lot of queries from your side, which is an important aspect. That's my view. First of all, Hussein, can I request you to can I request you, Hussein, to share the question with everyone rather than only me, so that everyone would be aware with your question. Uh, Secondly, let me share. There is a question which is directly to me, like not shared with everyone, which I strongly discourage. How many past papers shall we attempt, as 80 questions are difficult to try in short time? So are you trying to tell me that you are going to start from today about the exam kit? If this is really the case, then yes, you have a very little time. But nevertheless, if this is the case, then I strongly suggest to follow a LIFO basis. LIFO basis. Okay. With the latest paper for the end, and move further back. Move Move further back, as in, for example, the latest paper would be of March, June 22. So skip the March, June 22. Do start from September, December 21 and go further back, back. Attempt all of the 4 questions. Uh, to Mustafa, is there any advice that you, is there any area that you would advise us to look out for? My dear, the answer is with all due respect, no, because there is nothing such particular area exist in the TX or ATX or and throughout the ACCA. I hope all of the students are part of the WhatsApp group. But if there is someone who is not part of the group, you can request myself or admin to add you in the group. Okay. So any further question or are we good to end? Any further question, please? Once again, I last moment advices to all of you. Last moment advices, since I'm going to close out this session. First of all, in the starting area of exam get, probably just after the index kind of stuff, there are 4-5 pages of time limit and election dates. Do follow that properly. Do follow that properly. Okay, because in that time limit and election dates, approximately 80% of limits, etc., are covered. So I repeat, do have a good grip on that. First of all, uh, Easter, it is in the starting of the exam kit, the Kaplan exam kit, before the questions, after the index, somewhat in between, there are 4-5 pages which are captioned as time limit and election dates. In the time limit and election dates, you will there is a summary of all of the text submission dates, the relief claiming dates. Approximately, it covers 80 to 90% of the key dates kind of stuff. Do revise it on daily basis. Daily basis. You have to memorize it. There is no other option to do that. First. Second piece of advice. I shared a summary of ethics with all of you guys during the classes. So if there is someone who don't have the summary of the ethics, do let me know. I don't mind sharing it. I will share. But point is, please, these are 5 marks for ethics. Do give a good practice of ethics also, because these are the easy marks. Okay. This is the second piece of advice. Third piece of advice, start the paper with the question which make you, which which supports you in maintaining your confidence. Don't pick up the very difficult one. this would lead you to become underconfident. Don't pick up the question which you like. I'm champ of this area. I can do like this is my best area. Don't pick up that question also, because you will become overconfident, and in overconfident, you will be losing the easy marks. And this is the personal experience. Last, not the least, try to complete your paper, but completion of paper should not be on the compromise of quality. You have to maintain the quality also. Advices are over from my side. Anything from your side, do let me know. Else, thank you from my side. Uh, Faisal, please do drop me the message again. I would share, because I'm not sure where to drop which file. So do drop me. I would share it. And I do drop me both the things to share the today's PDF, the ethics summary. Who don't have it, I would share that piece also. Perfect. Thank you, guys. Best of luck for your exam from my side. Uh, Tomorrow you will be having the session with Sarjaya, where where the focus area would be section B. Thank you once again from my side. Good night. Allah Hafiz. Always available, Hussein.